Meanwhile, break for us, and on the other side of it, David Dahl will be with us. He is the president and CEO of Canale Trust Company. He says, don't sweat the dips like yesterday, because look, we're up 52 points. The faithful will be rewarded with this rally. Our next guest is still bullish for both stocks and bonds. He says he's not going to be surprised if we see a pullback anytime soon. Joining us for a little strategy session on this Friday, David Dahl, president and CEO of Canale Trust. His firm's got about $1.8 billion in assets under management, and it is good to have you with us.
Thank you, Ed.
All right, so a little bit of a pullback. You know, I mean, I gotta try to get a sense of what that means. Is that, oh, we get a little 2 or 3%, no big deal, or is that I feel things are a little toppy and I wouldn't be surprised at something more significant?
Well, it was just about 3-4 months ago we had a 5 to 7% pullback with the Asian contagion as it came through. And we've had such strong momentum. I think people have undersold the power of the markets, the power of the economy. And as we've moved up to this point, a little bit of a pullback heading into the summer months wouldn't be without reason, something in the 5% range.
So what does that mean you do? Does that mean you say, all right, if I want to try to play the seasonal trend, I just put a little bit more in cash right now, or are you even more conservative than that?
Well, that's one thing. We've certainly looked with clients at pulling back a little bit, back to our benchmark guideposts.
Taking gains where they've been. What are your benchmarks?
Well, for a typical client, it's going to be around 50% in equities,
okay,
and we've let them run up to around 58% over the last year. So pulling back to 50%, taking some gains, that's absolutely appropriate. But longer term, I mean, the power of the market is still here. We've seen earnings that have come in much better than expected. We've seen an economy that's done better than folks have expected. So even if we have a little bit of a near-term pullback, our outlook throughout 2007 is still pretty positive.
So we're still in the midst of the longest or second longest, I got to check which one it is, but bull market ever right now.
I think it's the second longest at this point. But yes, we are. Now, 2008 could be a bit dicey. We have politics that are really going to swamp the markets. We have a little bit of some concern heading into 2008 as we sit now. A lot can happen. But throughout 2007, really some of the things that are going to really come up for the market is the impact of the Federal Reserve, because we see some probabilities growing that the Fed's going to be cutting rates maybe by year end.
That the Fed will be cutting rates by year end. All right, so right now, if you're saying maybe pull back to your normal allocation for equities, but that's not bearish, it's just caution, seasonal, what would you actually be selling? When you say take some gains, what are the areas you want to take them in?
Sure. When we look across sectors, some of the sectors that we're not in love with right now are the consumer discretionary. We think that consumers are pinched, obviously. Yep. The high-end part of that, a company like a Tiffany's, for instance, there's great opportunities there. But pulling back on consumer discretionary and favoring the international side of things, whether it's direct international investments like a Siemens or a Rio Tinto, or even companies here in the U.S. like 3M that have strong international sales. When we look at what's going on with Lowe's, that's just announced that they're returning great returns to shareholders in the form of buybacks and dividend increases, we think a lot of companies, especially large caps, are poised for that.
I'm sorry to jump in here, and I know we have to go, but you know, Coca-Cola this morning, doing the Glasso deal, they're doing cash. All right, I'm making a link here because I haven't had a chance to read the whole release, but they're slashing their stock buyback from as much as $3 billion to as little as $1.25, or as much as $5 billion. I'm sorry, to as little as $1.25, if I have that right. Yep, $2.5 to $3 billion is what they were going to do. Now they're doing $1.75 to $2 billion. As an investor, I don't know if you own Coke, but I mean, does that bother you that they are slashing their intended buyback program?
Oh, not a bit. Now, we don't own Coke. We have in the past. But companies that turn their cash into investments where they think they've got a higher rate of return for shareholders.
So you'd rather they say, we're going to buy vitamin water with that? Okay.
Yeah, that's good for a company. But if they're not going to do that, just sitting on piles of cash, returning it to shareholders in buybacks and dividends is a good thing.
All right. Well, thank you very much. Appreciate your weighing in on that one.